In this video, we'll look at the four main pillars of getting set up to trade. So if you're looking to get into trading crypto, maybe just analyzing the market a little bit better, we'll go through that live in this video. So on-chain analysis, technicals, trend analysis, and then the last one, which I think gets overlooked a lot, which is kind of news and attention and just the experience of feeling when the market is at an inflection point, because that's what we're doing when we're trading. Trading is, I think, a smaller part of a portfolio. We should put together a long investment portfolio first, and then we can trade around the edges. I'll go through all of this and kind of how to think about that in this video, because what we want to do is actually make money and make returns. And we want to do that in a way that's going to benefit us long term. We don't just want to trade and lose money and take speculations, because we're going to be on the losing side. So let's go through all of that in this video. Firstly, we need to get set up with a trading system, right? So you will have your trading systems. I'm going to use Bybit here for this example, but there are many other good ones. So Bybit lets us trade in the spot market and the derivatives market. If you are a beginner, you might want to trade spot. So spot is where you cash settle. So if you want to buy $1,000 of Bitcoin, you need $1,000 of cash deposited on the platform, you can buy it. With derivatives, this is more suitable for short-term trading. Essentially what we're doing is just trading the price of the assets. So what you can do is put $1,000 on the system, and you've got that there as kind of collateral to fund any potential losses from your trades. So what they do is just let you take a position on the price against another trader. So you can open a long, you're benefiting from the price rising. So you open long, close out the position to open and close the trade. You can also go short though, which is just selling first. Obviously you don't have any of the crypto there, but you don't need it because you're just trading a contract. So you actually take a short position, you sell, and you benefit from when the price goes down. So if the price falls, you close the position and make money. And if the price rises, of course, you're short. And so as the price rises, you're losing money and you have to close out the trade at some point. Now, how it works on crypto exchanges, if you are trading futures and derivatives, is that if you're making a loss, let's say you have $1,000 and you make $1,000 loss, the crypto exchange will close out your position, you get liquidated and your $1,000 is gone. So that's how that works. With spot, it's a little bit different because you can only go long, right? You can only swap one asset for another. So you go long with cash settling, you buy the asset, and if the asset goes down, you're losing your money, but you still have the asset. It may be a worthless asset at that point. Or with spot, you just hold it if you're an investor, right? So investors, if we're holding for, let's say, more than 6 to 12 months, that's our investment portfolio. We need to buy a spot. We need to buy and hold the assets that we want to invest in over the long term. For trading, derivatives are used because you can go long, you can go short. The trading fees are a lot lower, which is obviously better if we're trading shorter term because percentage movements are a bit different. You just have more options with trading futures, which is why people do it. Timestamps are down in the description as well for all of the different sections of this video, going over each of the main pillars and why they're important. So getting set up on a trade system, I would only use the top exchanges. Bybit and Binance are really the two main exchanges that people will trade on. A lot of retail users use Bybit, myself included. Of course, these aren't available in every country. So if you go down the list, a lot of people try to gain access to trading at smaller exchanges. I don't personally think that's a great idea. We know, untrustworthy exchanges. We don't really know what's going on behind the scenes of these. So I would only stick to the top exchanges that have been around for multiple cycles. They obviously have good businesses. They're run well and, making profits because we have our assets on their centralized exchange. And so if anything happens to the centralized exchange, essentially our assets are there and they're actually the property of the exchange. So it's really important to just make sure you trust that exchange. Now, I've used Bybit a long time and Binance and a couple of others. The top exchanges, there's no need to go anywhere else. So Coinbase, Kraken, Bybit, Binance, OKX, really the top ones. So I'll show you using Apex as well. Apex is Bybit's decentralized crypto futures platform. So if you want to trade on that, the benefit of that is that you hold your assets, right? So your assets are there and you can deposit them, withdraw them from the platform, but you hold custody of them at all times. So this is a lot easier to do these days. And I'll show you on Apex as well. This is Bybit's kind of on-chain exchange. And then I'll show you on the Bybit centralized exchange as well. And I've got links below to a bunch of deposit and trading offers. The centralized exchanges give those. They want new users. And so you can get deposit or trading bonus on multiple of these exchanges. I'll leave links below. You can see the details if it's available for you or not. some people are moving towards trading more on chain these days because the infrastructure is better, both the wallets and the applications. So before, you used to have to get a Ledger device or a Trezor, get the crypto on there, link it to a MetaMask, and then link the MetaMask to the app. These days, most major exchanges will give you a Web3 wallet that you can set up within the app. This is a mixture of custodial wallets, so they actually keep the keys, or MPC, maybe passkeys, like I said. So those videos explain what that is, but to show you this, Bybit Web3 wallet. So we can click wallet here. There's a custodial version, there's an MPC version. You can choose, just scan a QR code, you can link it to an app, or you go to trade, derivatives, that's actually Apex right there, or you can trade on chain and just buy coins in the spot market on those. If we look at something like Binance, you can go to Web3 wallet. That's the Web3 wallet there. Bitcoin, ETH, all of the scaling layers, Solana, and you just scan a QR code to link to an app, or you go down to discover, and then you can just get directly into the apps. So there's options for everyone. You can make the decision which one is best for you. I'll show you how to get set up and connect to wallet though. So I'm just going to use Rabby here. Again, another wallet. That's actually a seed phrase wallet. What you can do with wallets these days as well is actually just scan the QR code if they're on your phone. But just to show you what it looks like, so connect wallet. I'll click my MetaMask here. So send requests. I'm actually using Rabby. I just click MetaMask, but signing and then create. This is just a sign in to the application. So I'm not doing any transactions here, but I'm just signing in to actually sign the wallet into the application. And that's the account. So simple as that. If you have assets in your account, it's going to show you. I've got some USDC here that I withdrew from my centralized exchange into my wallet, and I can go ahead and trade just like a centralized exchange. So there's options whether you want to go on chain, whether you want to keep custody of your assets, or whether you just feel, you know, I'll just use a centralized exchange because it's easier and it's all there and I trust the exchange. The first step of getting into any trade then is looking at what the trend of that trade is. And so we can give ourselves a much better percentage chance of being correct if we know the trend. And so what we're doing, I think, when we're trading is just trying to make the least mistakes, or just sticking around long enough to actually get that trade right? Get the lucky trade. If we stick around, right, and we don't blow ourselves up, then we're going to have more chance of getting that trade timing perfect and making that trade, right? So the trend analysis is pretty simple for crypto. It's a new asset class. It's monetizing. So it's going literally from zero up to some market cap in the future. So the real question is, can we stick around long enough to actually take advantage of some of these waves? The other question is, if we know crypto is just monetizing and growing, do we even need to trade it? Why don't we just buy? Why don't we just buy and hold? Well, I think that's a much better strategy for a lot of people. I'll probably try to dissuade you from trading a lot in this video because I think trades come around quite seldom. They do stand out when you see them, but you know, we can also just buy the asset class and wait for it to actually monetize and give us the returns. Trading is a much smaller part where you have to be much more tactical, and you can't trade all the time. There are areas which stand out as trades that we can try and stick around long enough to get those and try and make more, right? But I think the majority of it is just gain an allocation to the asset class that's growing over time. That's going to be the best option for most people. In any case, what we're really doing here is looking at an asset class that's just growing, right? It's just fundamentally small and growing into its size, whatever that may be, and we're not mature yet. So the trend is upwards for these networks that have network adoption, right? So Bitcoin and Ether, clearly that. We'll just stick to Bitcoin in this video. It's very simple. We know it's got an adoption curve. So the adoption is up and to the right, and that means the price will follow with these waves. And so our job, if we're trading for the active part of the portfolio, is to try and catch these waves. It's really simple. You have an asset that's growing. We obviously want to kind of long the asset, right? So we're looking for areas where the trend, the price, is cheap in relation to its trend or is pulled back in relation to its trend. So the trend is important because if you're longing something that's actually just not in an uptrend, then it's going to be more difficult. So we're taking that as a analysis that Bitcoin has an adoption curve. It's growing over time. And so we can kind of plot these moves up and down along this kind of long-term trend, right? So we can do that over the longer term in these 4-year cycles that Bitcoin has. So we can look over years. We can also drill down a little bit shorter time frame or lower time frame as well, into these pullbacks that we get within uptrends. So the adoption curve is pretty visible to see, right? The price is moving, it's volatile, but the general adoption curve is to the upside. So if we have that in the back of our minds, essentially what we're looking at now is, if we want to go long the asset, we want to see where Bitcoin in relation to its trend is very, very oversold, or in a pullback, and then we can try and time those entries. Because what we're doing when we're trading, if we're thinking trading is a smaller part of the portfolio, so we have the bigger part, which is just our Bitcoin's growing at 50% a year, so we'll just invest in it. But with the active part, you're looking for the time when Bitcoin is in a trend and it's sold off. You're looking to buy that, and the next leg to the upside, that's what you're looking to time as a trade, right? So the first one is the trend analysis. So how to do this? This is TradingView. So again, I'll link everything below. TradingView is free. This is all free to use. I have the paid version, but you can use most of this, I think, for free as well. So what I've done here to get this, right, this is kind of a long-term trend analysis you can see here. So what people do here is they get the Bitcoin chart, so Bitcoin USD up here. If you need to know how to use TradingView as well, I've got a video guide. But down here, we need to go to logarithmic. Okay, logarithmic crushes the price scale up at the top. It's just a much better way to see longer term price trends. Now we can go to regular. Regular is a total mess, although you can actually see, right, the periods where you get these huge price moves, right? And we're in one now. So that's the 3 price moves. It does look crazy though, because we're actually getting an adoption curve from basically 0. So if we go logarithmic, this gives us that much smoother trend that we can see, right? So it's very clear that Bitcoin is moving in an uptrend. Maybe the price moves are less now in percentage terms, but we see, and what I've drawn here on the left-hand side is just a curve here. So we just draw that curve on and kind of fit it. Now you can do regression analysis, which is more mathematical, but on TradingView, you may just want to draw this on because I think we can just very easily see that. So we have a trend here, right? You can draw that on, and then above and below, just the standard deviation. So you draw that one trend on, and then you can take it above and below. Why? Well, we can very clearly see that, Bitcoin has this curved adoption, and it goes through these stages where it gets very overpriced in relation to its longer term uptrend, and it gets very underpriced in relation to its longer term uptrend. So as a start, and these are, longer term cycles, right? But it's pretty clear to see that we have these waves where we get the growth in the network. People get a bit excited, they kind of buy it, and it's known as overbought, where the price gets way too high, comes down, but then the price gets way too low. If you're a much longer term investor, you can use these trends pretty easily, right, to see areas where you'd be wanting to allocate. Essentially, anything under this orange line, if you are looking to accumulate the asset, is like ultimate buy zone. You must be active there. As you get above it, you can start to make decisions. But in any case, you can see these trends, right? So it's very clear. And what I've done here is just drawn these areas on where we have, I've colored them red, yellow, and green, which I think is drawdown, recovery, bull market, drawdown, recovery, bull market, drawdown, recovery, and we're in a bull market now. So they play out. These are the halvings. I've just drawn lines on here, so you can just draw these lines, trend line down and draw that on. And I've linked that up with each of the halving dates. So that's how I've drawn this one. It's very, you can just see the trend, right? It just stands out. I mean, it's as clear as day. Now, knowing that trend, and if your analysis, if you're confident that Bitcoin is growing as a network, which we can do a lot of analysis, then you can much more easily trade. You can be much more confident of actually outperforming the market, because during these times when the price goes down, you may have seen it online. Everyone's scared. Everyone's calling it to go for like crazy numbers to the downside. People are saying sell, it's not going to come back. But if we're confident in the asset, we know the asset is in a long-term trend to the upside, we can take advantage when the price is relatively low. And we can use the price when it's relatively high to also do what we need to do in our trading lifestyle. Do we want to take profits? Do Do we want to hold here and whatever? Now, if you're trading shorter term, these can help you as well, because up at the top, this is not a time to go leverage long BTC. You are at the top of the range. You're at the top of a bull market. There's really nowhere for it to go. Eventually, the price does have to come back into its kind of relative strength, its relative growth. You can't be up here all of the time, right? And you can actually see that we reject from here very clearly. This is because of macro cycles as well and central banking cycles. But that is just analyzing the trend. We have the trend. And so anything up here, we actually have to probably not take any long positions. We have to say to ourselves, it's not the time to long. It's not the time to trade here. We are mispositioned if we're taking a long position when we're up, like way up at the top end of the trending range. Down here, these are great areas to take long positions, right? Because you're at basically the bottom of a bear market. Now, it's not easy because when the price is down here, everyone's capitulating. It's awful sentiment. But that is trading, is essentially taking a position where everyone else is wrong. And you know that you're in that trend where it's going to kick in at some point. So analyzing trends, that's a longer term trend. Now, if you come down into shorter time frames, lower time frames, we'll go on the day chart, reset view here. This works in these areas as well. So we're going to look at shorter term trends and pullbacks within that. So again, because I've done this longer term analysis, I can now drill down, and that's going to give me a lot of insight because the trend is what we have to trade. So it's very clear that in the last cycle, we had this bear market. And then as we're trading now, like if we reverse a little bit to here, it's very clear at this point, if we were here in September 23, that we're not really in a bear market anymore because the drawdown happened and we've got a lot of reversal signals, right? You've got a reversal from here to the upside. You've got a sell-off and another punch higher. You've got another sell-off, but we punched higher again, right? Another sell-off, but we're not in a downtrend, right? So that enables us to take positions. Really, we want to be going long when prices are coming down in uptrends, right? So the trend is to the upside here. We're in a recovery period and we want to make sure that we are taking positions where prices are soft or coming down within the uptrend. Now you may say, well, why don't you just take positions here as well? Well, that's different because we're coming from the bull market. So it's important to understand that we're trading trends, we're trading uptrends, but we have to be in those bull markets. We have to be in those phases where we're actually recovering and taking another step forward, right? So trading trends is important, knowing the longer term trend, but also we have to make sure that we're actually in one of those phases where we're recovering or in a bull market. The trend isn't, when we're up here, we can't take long positions because we know that we're at the top of a bull market. We know that we're at the top of the expansion. So if you're trading, you need to make sure that you're actually in that upswing, that up phase, right? So this is an up phase. We can trade this. These up phases, anywhere from here upwards, that's an up phase. When or if we get up here, can't take long positions. If we're coming down towards this, you're in a downtrend at that point, short term, right? Because you're trending down probably to either the midline or the low line. And so we have to notice the trend and also be wary of how long we're trading for, like our time frame for the trade. We need to take those swings to the upside. So we need to trade those swings. If you're investing, just buy all the time and wait, right? But if you're trading, what you're doing is taking advantage of the trend. So yes, we're in a long-term uptrend for BTC, but you have to also recognize the shorter term. You have to be in a shorter term uptrend as well, because you're buying dips within uptrends and not just buying bear markets where you're going to get wrecked. And, you're going to get wrecked on these trades, right? If you go in here, and we come down, you're going to get wrecked. All those stop losses are gone. You're going to get liquidated if you're trading futures, or if you're trading in spot, you're just going to be sitting on a 50-60% loss. So the trend is the important thing to note, that we're trading an asset that has a secular growth trend, and we're in an upswing on the shorter or lower time frames as well. Something unique with crypto is we can use on-chain indicators to actually show us where we are in these trends as well, which I think is really important. I go over this in a lot more detail in the Crypto Investor course. I have a whole section on on-chain, and I actually update it with my analysis as well over time. I'll link the crypto course below, but we'll go over the simple version in this video. So MVRVZ, it just shows us how price is inflecting over different periods. So what we want to be wary of is not buying highs. If you're buying highs or impulses to the upside, what usually happens with price action is that you get an inflection, upside, and then you get a consolidation or pullback. Inflection, pullback, inflection, pullback. That usually is how price action works. So we can see that on the charts, but Onchain gives us a great idea of this as well. Now, essentially, this is kind of two things in one. So MVRV shows us areas where Bitcoin's price is relatively very, very low in relation to its trend, or relatively very, very high. You can see the spikes up here. These are periods where the Bitcoin price is topping out in bull markets. Now, again, we have no business trading there, right? Unless we're probably selling, right? Unless you want to make sure that you've got some fiat currency for the next 12 months or whatever it is, right? If you're investing here and you've been investing for a decade or 4 years, 8 years, and you're sitting on huge profits there because you're at an all-time high at the top of a bull market, these are not times to be going leverage long and saying it's going to go higher, right? There's just a time where Bitcoin is so high in price in relation to its actual fundamental growth that it can't really stay up there for too long. In any case, it's not the percentage. When we're trading, we're trying to take the good percentage trade, and that's not the percentage trade to take. So MVRV shows us that, right? It shows us where the price is just very, very high. Those are typically the kind of end stages of a bull market. Now, they also have big drawdowns where you can potentially buy drawdowns, right? You can see MVRV really draws down here and actually spikes again. You can see during this cycle, you had these drawdowns in MVRV and the big spikes up, right? So these drawdowns are something to trade, but never the impulse, because you're just on the wrong side of everything at that point. You're in on a high, which is, you're in no man's land. So we can use that, right? So essentially, if you're trading in a bear market, it's not really for trading. That's just for buying and going long, because you're basically at the low end of a range, right? As we come out into bull markets, you do maybe have to switch into buying dips if you're looking to trade. If you're investing, maybe not. You just accumulate, right? So, but you can see that, right? You can see the MVRV. This isn't a price chart. This is orange here. This is MVRV. It's not a price chart, but it's showing us where we're getting drawdowns in price. And if you think you're in a bull market, you buy the drawdowns in price. You buy the consolidations. So that's one. We also have AVIV ratio. It's a similar thing. It's looking at the true mean price, which is the on-chain price of where the market actually is. So this is the kind of mean price of what price people are in Bitcoin at. And during bull markets, it does act as a support band. But essentially, when the price is under this, you're in bear markets. Again, probably time to just accumulate and go long in spot and buy. When you're in bull markets, which is price appreciation phases. So we can see the previous two here, one here, one here. You get these drawdowns, right? So if you're looking to trade, what is a trade? You're looking to buy in when price is drawn down within a bull market. That's the trade, right? So you're looking to buy the drawdown, wait for the next phase up. So Onchain lets us see that, and it lets us see some of the drawdowns. Essentially, AVIV down at the bottom shows us exactly what phase of the market cycle we're in. Anything under this, anything under zero, is a bear market. What's the strategy in a bear market? Accumulate. Don't get liquidated. Could go lower. Buy spot. DCA, good price. If you've got a 2-year time horizon, then Bitcoin, if it's growing still, will have its next phase up. As you move into the bull market, what do you want to do here? You have to be more tactical here if you're trading and saying, buy these dips. You can see that. Well, the price shows you that. AVIV shows you that. MVRVZ shows you that. These dips. So what do we have to be aware of here? Every dip that we have is an opportunity for a trade. And we have to ask ourselves, will that trend continue? Right? Are we at the top of the bull market, or do we have the bull market still to go? And so this trade is a good trade idea. So we can actually get in on a 20% pullback because we know we're going to go either up to the high again or maybe further. So that's the trade. That's the trade idea, right? So what we are in is a asset that is accumulating price over time. So we assume it's continually going up over time. In bull markets, we take the trades. In bear markets, I think we just accumulate and hold spot because that's the trade there. I mean, you're talking about 6, 8, 12-month period of very low prices comparatively. So AVIV shows us those drawdowns. The one thing we don't want to be in, right, is when AVIV is extremely high on an upswing because we're in no man's land, like I said. The other thing to look at is when the drawdown occurs, you know, we have to get in at some point, right? So these are bull market correction drawdowns. 20 to 40% is a kind of normal drawdown. There's two important things there. The first is we have to be looking for those. So what is a drawdown? Well, it's an inflection high point in an uptrend and a drawdown from that price. So anywhere from like 15, 20, 25%, if you're trading, that's where you have to be active. Now, during those times, that's when the sentiment changes. If you look online, everyone will be like, you know, sentiment dries up, attention dries up. People, you know, they kind of look elsewhere. Attention goes somewhere else. That is your opportunity to take the opposite position of what the masses and the herd is doing. Because if your analysis is correct, you're taking a position in a wider bull market during a drawdown. That is the trade. That is the only way to trade because you're giving yourself a higher percentage chance of winning. Now, you can wait for these breakouts if you want, where the price breaks out and just kind of jump in and ride that. That's another potential trade idea. Or to actually give yourself better percentage chance of actually getting in at lower prices, you trade the drawdowns. It's up to the individual. When I trade drawdowns, then you know. Anything that's like 15 to 25% is probably trading, knowing that it can go another, it can go 40%, probably 40% down is like a big drawdown. So if you're trading 15 to 25 and you're getting in around that area, you have to be aware that it may go down obviously more than that. You're sitting on a loss for a while. That's a normal bull market drawdown. So you have to be getting in at that point with knowing that it can go a bit lower. Or you just wait and wait for the kind of breakout and you're just piggybacking on a breakout. That's more dangerous because now you're trading at this kind of higher price, which is getting into resistance areas. And so it's a strategy, but it's a lot more risky. So in terms of it may actually reject down and go further, right? And then you're in at a price which is at the inflection high point getting rejected. So there's different trade strategies, but essentially whatever one we choose, the drawdown here in a bull market, around 20, 30% is somewhere where we need to be getting in. And then we can use these on-chain points to know exactly where in the cycle that we are, right? So if we're in a bull market, we trade the drawdowns. If we're in a bear market, we just allocate because, you know, essentially you could be going a lot lower. You don't really know what's happening. You're not going to be inflecting to the upside a lot, in the trend upwards because you're not in an uptrend at that point. So know where we are in the cycle, use on-chain there, use the percent drawdowns as something to kind of guide your way as to where exactly you take positions. Now we'll look at some technical indicators that you might want to use on price charts as well. When do we get into the trade? The trade entry, super easy. All the work beforehand, deciding where we are in the trend and if we've pulled back enough for us to want to go into the trade. That's the really hard part because we can look at lines on charts all the time, but trading is difficult because it's actually a mental thing. We need to mentally prepare ourselves to take risk, and we need to essentially take a position that's opposite to what the market is doing right now and the sentiment is doing. And that is very difficult. So we'll look at technicals, but we'll go over some of the, kind of thoughts around that. So I've gone to indicators here. You can type in moving average, just simple moving average. Like it's just easy to see what's happening via that. So I've put 2 on here and I'm using a 20 and a 50 period. So I'm on the month chart right now, just to show you a longer or higher time frame. Down here, RSI, so indicators, relative strength index. This one here, so put that on. What does this show us? it shows us where the price again is relatively strong, relatively weak. Now, a lot of people would think that if the price is relatively strong, it's going to reject, right? So if the price is relatively strong, you think it's kind of this mean reversion theory, right? If it's very strong, it's going to go towards the midline. If it's very weak, it's going to go towards midline. I think that will lead a lot to a lot of bad trades, essentially because when the price is strong, there's a reason for it being strong, right? So the price is very strong here during this period, right? And so you're up at, in the previous two bull markets ago, right? The price is very strong. The relative strength index is showing us the price is extremely strong here. So a mean reversion trade would be to short this, right? But let's take a look at what the landscape is. Within Bitcoin's longer term trend, the price is still below the midline, right? And so therefore, why would you take a short position there? Or why would you think that the price is actually going to revert? Where would it revert to? Like down to the very bottom again? It's clearly in an uptrend, right? So the relative strength index is actually showing us that we're in a bull market and that the price is strong. But we're also at an absolute price level still relatively low in comparison to what could happen in a bull market. And so playing a mean reversion trend to the downside there is going to wreck you. Right here, it's just showing us that we're in a bull market. And so that's actually a long trade, right? Because look how long Bitcoin was strong for. It was strong for almost a year, right? And you had the whole uptrend there. These are month charts. So you've got 6, 7, 8 months of just upwards price action, right? So we can't just use this and say it's going to go up here and reject. Yes, it does, but this is a long time, right? This is a year worth of strong price action. So the price can be strong for a very long time. Again, if we look at the previous bull market, we have the price being very strong here. And again, Bitcoin is around its midline. So not a short trade for me. I think that's probably showing us that we're in a bull market and that, unless something happens in the world with some news event, you're in a bull market with strong price action. That lasts for another 3-4 months, right? It actually goes up to an all-time high here later. So relative strength index can't just be used as short when it's strong, long when it's weak. But it does give us an idea of what kind of market phase that we're in, right? So we can see this yellow line is like a moving average or a smoothed out version of that. So, these bear markets essentially, right? You can see them. If you're investing when the price is relatively weak, we have to be investing. When we're trading, we really want to look, like I said, for a bull market, which is an uptrend in the relative strength, right? You can see the moving average kind of moving up. That's good. That's a good sign. Shows us we're in a bull market. So that's the longer term. If we drill down, maybe go for the 1 day now, you can use this much more tactically to actually take positions. So what we see here on the 1 day is the relative strength index. Firstly, it's a lot more noisy. You can see that it changes quick, all right, which is difficult and also untradeable. Relative strength index was pretty strong at this point. So a mean reversion trade would be, it's going to top out. The price didn't top out though. It actually went up, even though relative strength came down. Why? Because we had a big breakout move here. And what happened with the price is actually just melted up. And so it was relatively weaker in its move, but it still moved up. That's why I don't think you can use relative strength to trade and just say, we're going to take short positions when it's overbought, because that mean reversion in relative strength doesn't necessarily translate to the price. I think we have to go to fundamentals again and say, hey, we're in an uptrend, right? We've bounced from the lows. You can see the yellow here. This is a recovery phase moving into a bull phase, and we're probably in an uptrend. So I only really want to trade where we're getting pullbacks in price, right? As I said, you can also trade breakouts, right? So this was a breakout. Right here, you're getting kind of this uptrend here, and to trade that breakout, you could have done that. But again, I prefer drawdowns in uptrends. So I actually would have traded like this consolidation rather than this breakout. But that's up to the individual. If you want to trade breakouts, you can. I just prefer not mean reversions, but consolidations or small drawdowns within uptrends. But the relative strength now shows us areas where the price is relatively weak or strong. It just shows us that we've had a move somewhere. And so when I'm looking for drawdowns, yeah, we're looking for consolidation, price action. So these areas, this area here, this is kind of all consolidation. These consolidations, then we look down and say, well, what's happening with the price action, right? Is it relatively weak? So we've got that here. So what we're seeing right now is consolidation, price action, kind of weak price action. These areas in uptrends where I know that we're potentially an uptrend in a bull market, those areas are important for me to look at. So you've got the on-chain stuff and you've got the technicals, and you can kind of bring them together to find areas where there could be a trade to get into. You actually don't even need all of that. You can just, after a while, just feel. We can see from the price chart, if you take all of this away, you take all of the indicators away, after a while, you can just see through the price chart where we have these consolidations, right? So these consolidations or drawdowns, when you're looking at these and they're, 15%, 18%, 20% from the kind of range high, those are areas, if you're looking to trade, right? Be more active and actually get in. So if you're investing, then you can use these areas to actually just buy your spot bags as well. And if you're trading and you want to take more risk, then those would be the areas. I mean, each one of those, we had an inflection to the upside each time. So it's not going to work every time. There's some trades where it's going to actually just go further down. But these are the areas. I mean, where else are you going to trade, right? You're going to try to trade dips within uptrends, or like I said, breakouts, if that's up to you. One more thing before we get into entering the trade and some more specific technical analysis is to take a step back and try to just analyze logically what we're actually doing here. Because again, trading is actually a mental exercise against yourself. The market is what it is. Everyone has opinions on it, which are all completely irrelevant, including mine. Just because I have an opinion on something doesn't mean that that's what's actually going to happen. I have to be humble to know that the vast majority of inputs into the price are basically something I can't know about. There are people doing things in trading rooms and making decisions that I will never know about. I don't know what size they're trading with. I don't know what news is going to come. All of that essentially means that after I've been trading basically for almost 15 years at this point, not in crypto, I started off as a broker in London trading stocks, but after all this time, I have come to a very concrete realization that I cannot predict what the price of anything is going to do short term. So therefore, why am I trading? I'm trying to give myself decent probabilities of getting slightly lower prices for Bitcoin because I'm more confident in the longer term trend of it, right? So I'm way more confident in longer term trends, just fundamental stuff, like people are adopting Bitcoin, it's coming into an ETF, right? So that fundamentally should increase the price of BTC over the longer term. That's a much higher probability going to happen. Short term, right, the price could do anything. Even if I trade perfectly, something is going to happen that I don't know about, and the price just, wicks down 20%, my trade's out. So being humble enough to know that is important, because then we can take our strategy and make sure that we never wreck ourselves. So if we're taking more risk like this trading, I believe that it should be done with, let's say, 10% of what the money that you have to put into crypto. I believe most of it should just go into buying and holding strong assets that you believe in, that have a network adoption. That's really it. Because we don't actually need to trade them. This is Bitcoin's CAGR, compound annual growth rate. Currently, CAGR is 70%. Right, at the lows in the bear market, it was down to 25%. But let's call it about 30-40% CAGR. So if I just buy Bitcoin each week, believe in its adoption and growth, then I'm going to be making, let's say, 30 to 40% annualized returns. Not doing anything, not spending all my time at a desk trying to trade. I can actually get on with my life and focus on more important things. So I've got that there. that might be enough for most people. You don't even need to trade it. Also, any strategy and extra risk that you take has to be making more than 40% annualized returns from that strategy. Otherwise, you're not outperforming, literally just doing nothing. So I just want to talk about that, because it's actually important that we don't want to snatch defeat from the jaws of victory and overtrade an asset that's giving us 40% annualized returns, or maybe a bit more depending on the bull market, and overtrading and just not making any money or making less money trying to be clever. So that's where we are. And I think for the amount we trade, 10% of the portfolio active trading. So either if you're more actively trading Bitcoin, or you want to get into some other lower market cap stuff, that's for other people and not me. But 10%, not all of our bags. We need to make sure that we actually take advantage of crypto's growth and get that return, and then trading 10%, and then we can take risk with that. It's also important that we never trade with more money than we care about, because if you're relying on the market to make a movement, let's say all of your stack is in and you're relying on a trade to work out, you're in a massively weak position mentally, because you will not be able to handle the volatility, right? So let's say we get in right here. So we're in a consolidation. We've had a pullback from the all-time high, and we're at a point now where it looks like Bitcoin is, seeing support here. So this is an area potentially to buy, but it's also an area that you could very easily drop 10-15%. If you're relying on this trade and you're in a loss, you're now unstable, and the trade's managing you and you're not managing the trade, because you've got too much money in, and now it's relying on the trade to work out, and it never will. If you need it to work out, it never will. So with short-term trading, we always have to make sure that risk and that volatility is something that we can handle, because we know that's my 10%. I've written it all off already, and we can trade with it, and we can actually be comfortable taking risk with that. The rest is tucked away long term. And if you've been in Bitcoin multiple years, it is producing these returns, and you're sitting on more. And so you're more comfortable with risk, and you're in a good, strong position to take risk. If you're in a weak position to take risk, you will get destroyed. I've seen it. It's a battle against yourself first and initially, and then it's a battle against the market. Let's look at our first example trade then. We'll go back to the bear market that we've just had. So these are really 4 questions to look at when entering a trade. What is the macro trend? Where is the Bitcoin trend? Where are we in that trend? And then what is the market trend and momentum right now? Right, so market momentum is important. What price levels are key? So let's have a look at that. This was the Silicon Valley Bank crisis, March 10th, 2023. And this was really the end of the bear market for BTC. Why? Basically, the Fed decides exactly where the market goes over the short term. It can draw us down, bear market. And in the bull market, where it's bailing out the system a little bit, maybe getting a bit looser with money, monetary policy loose, that means asset prices typically do pretty well. So we'll look at what is the macro trend. What I mean by that is, what's the central bank saying? If the central bank wants us to go down, it can do that, because it controls the money supply, right? Everything's traded against that. It's important. All of our debt is in that. So they control us, actually. So what is the central bank and macro trend? Let's have a look. So the Silicon Valley Bank crisis was a regional banking crisis in the States, pretty big, actually. And what does that mean? Well, it means that if they're going to bail out the system, then monetary policy is about to get easier. This was around that time. So that was very volatile and probably untradeable, right? Unless you're very experienced and you're looking every day and you're seeing around here that the drawdown was happening, right? And this was a kind of a 20% move to the downside, right? 20% move to the downside. Something that a lot of people probably wouldn't trade, because you're kind of in between the bear market and the recovery phase, right? So a lot of people may be saying, don't really want to trade here, could go lower, could go down to this bottom line, right? That's really where it could go, especially during a banking crisis. I mean, if they're not going to bail it out, then that's not good news, right? But what they did around this time, so let's say we didn't trade that, right? Because it was too uncertain and we weren't in a kind of uptrend at that point. So let's say we don't trade that. Because I think it's very easy to say, yeah, we'll just you know, we just buy this 20% dip and, you know, off to the races. Well, no, because we've been in this huge downtrend. People are probably just very reluctant. And, you know, buying a 20% dip there, what's the risk reward on that? Not great, because it might go lower. But what they did was they bailed out the system, right? They invented the bank term funding program, right? Banks were solvent again. And what happened when they did that is that Bitcoin had this huge upside move, right? Of like 50% to the upside. So now we're getting interesting now, because essentially we are now printing what potentially is a kind of uptrend and a change of the trend, because the central bank has changed now. So the macro trend is probably a lot more soft, which is good for risk assets. It's a lot softer because the central bank's turned. They went from, we're going to crash the system, to actually the system's starting to crash. Maybe we shouldn't do that anymore. So the macro trend has potentially turned. The Bitcoin trend and cycle is actually in a point where it usually bottoms out as well. So that's getting interesting. Then we have the market trend and momentum. Again, at this point, it's not exactly like a rip-roaring bull market, right? So you're at lower levels. So trading here is, you know, you're probably not thinking you're going to get really big upside movements, but it's maybe something that we can have a look at to say, hey, maybe you want to, you know, trade this. What price levels are key? So let's go down and see what price levels are key here. Well, obviously this was the low, so that's a key level. Then we have kind of this price action here, which I would draw a box around. Probably something like this. That is price action where it looked like the market was trying to bottom out here, right? And probably was bottoming out. Then you had, I think this was the FTX thing, which was ironically the bottom of the bear market, but it looks like the Bitcoin price was looking to bottom out around this level. You just have so many touches, right? Support levels. We got sell off here. We got supported there again. So this 20K was 18K, right? That's a big kind of support and resistance level. That seems like where the price wanted to trade to, like during the last bear market, right? And bounce from. So that is actually a support level if you're above it. So we wait, we see that, you know, the bank term funding program is coming. You want to maybe go long here, right? Because you're actually at an inflection point where the macro and the Fed are changing, central banks are changing, a bailout occurred, some more softness for fiat currencies. Maybe you're starting that trend upwards here. So what would we do? We either wait for a pullback within the trend, so we can do that if we want, you know, but actually we're still in kind of the bear market. Like if you look at AVIV here, it's actually pretty low. So if you're investing, I mean, you're just buying all that level, right? You're just buying this whole level. Anything under the orange line, which is the midline, you're buying Bitcoin, right? Because it's relatively low in price compared to its trend. So as an investor, this whole thing is just buying this. And it's really difficult because that's when everyone's like screaming to you that it's going to like 1,000 and that, you know, it's going to be over. I get that, but it's just not going to be if you're confident in the asset. In any case, investing, I think you just buy all this. If you're investing here, you're active. And if you're trading, you have to, if you want to get into a trade, now pick a spot, right? Because we bounced up here and we're now getting a rejection. So it's somewhere around here that you want to get in, probably this price, right? And what you want is, look, you may come down into this and get support again. So the price, or the price we want to get in at, if you take a long position, somewhere around here, somewhere around this level, you're probably getting into a trade and thinking that something like this would be the stop loss here, somewhere in this mid level here. I think what happens is if you trade here and the price comes down, fair enough. If the price is going lower than this, basically this recovery was a false flag because you've got this lower level where the price bounces from. So buyers come in at this level, which is basically 19.5, 20K. And they're saying 20K is too low. Goes right up to 30. Down here, if we reverse back to 20K, basically all of those buyers are gone at this point. And so now you're saying, okay, well, the trade's gone. But the buyers, right, if we come down here, the buyers aren't here. But we take a some sort of entry here on this small pullback, and we just say we're going to take that volatility, we should bounce from this level. We got bounces here. Buyers came in at these levels. We should bounce from this level if we get down there. Now, the price never got down there. It actually bounced off the top range of this. You can see this price action here. So we bounced from the top range of that. And so that's actually the support level. So what do we do here? We get in around this level on some sort of pullback, and we just wait and see what happens. Now, ultimately, it actually got rejected at this level a few times, which is fine, but we actually broke out here. So, you know, what are we doing here? We're getting into a position here. Where do you want to take profits? Well, you can then say, I'm going to go to the previous high point, which was 30K. But I think really here, you're probably suspecting that you're in a consolidation phase before, you know, a return, right? An uptrend. So you're probably looking for a much higher price than that. You're probably looking for a breakout of this trend at some point, right? I would say that if we're getting in at 27, 30K, we're probably looking at the orange line as some sort of price target, right? Because what we're saying now here is that the market's inflected and we're not in a downtrend anymore, actually an uptrend. So that uptrend eventually should take us up to probably this midline again. I just trade on these three lines. So short term, you're looking, if you're getting in here, some sort of price rise to like 39K. So getting in at 27, maybe 39 to take profit short term. However, I think if you're confident in Bitcoin's price cycles, what you're doing is buying here and actually just waiting for like this. And it might sound silly, but why get out of the trade? If you're literally timing the entry here at the start of the bull market, that was it, right? So you're getting in here. Your exit is the top of the bull market, right? Why would you get out any other point? So you're looking up like somewhere up here, no? If you're trading spot, yes. If you're trading futures, maybe you think, well, I want to kind of trade out shorter term. I get that. So short term, well, you have to be looking at other key price areas, and the trend is clearly that. You can actually see that the price, when we did break out, right, it actually came into this and got rejected around this level because that's the midline, and that's just, you can see the price has consolidations around here because buyers and sellers know that that's a key area. Bitcoin's fundamental growth, right? So if you're buying in here and you're looking for a short-term profit target, you have to look at, you know, support and resistance areas. Well, yeah, it's here. It's this price on this adoption, because this orange line is the adoption of BTC. So short term, 38K if you want to take that profit, but really you got to be confident you're in a bull market, right? So that's the take profit for the trade. I think it seems crazy, but that would be it, because you know what Bitcoin is doing. So you're in there. The trade was macro reversed. It's going to be easier. So prices reverse and we get in at some decent level. We see the next leg down, and that's where price would maybe get to. And if it goes lower, then we're going to lose. We're just going to lose our trade. And of course, have to get out of the trade. But we get in, and the profit target is either the next leg up, which is this orange line, or you just hold for the rest of the bull market. Next trade example in this bull market was the pullback after the ETF announcement. So under 39K, ETF continues to be a sell the news event. This is an absolutely classic counter signal mainstream media event where a real trader can take advantage of this, which is just absolutely the wrong side of the trade, right? So we'll look again, what is the macro trend? What's the Bitcoin cycle and the market trend? So we're actually at this price here. So we've just had the Bitcoin ETF, which is the biggest event in Bitcoin's history, maybe, to, you know, as in terms of institutional flows. And look, it out the gate had a bit of selling from the Bitcoin Grayscale Trust Fund. So that was selling, but you had some buyers. So again, what we've had here is a fundamental shift in the landscape. You've now got Bitcoin, which is open to institutional investors. The reason it is open to them is because they're demanding it be there and they want to access it and have access to it. So that's fundamentally bullish, right? So we're bullish in the Bitcoin trend. The macro trend is also very clear at this point, where the stock market and the Nasdaq's basically reversed from their downtrends, and now they're in huge uptrends, basically going towards all-time highs. The central banks are becoming a lot easier around the world. This is all conducive to a pretty decent market. If we're looking at the time as well, we're also having a big recovery from the bottom. We're coming into the Bitcoin halving. Like, the whole thing is pretty bullish as a backdrop. So again, what are we doing? Well, we know Bitcoin's going up in value over time, and that probably continues. So we're trying, as a trader, if we're trading, we're trying to take advantage of short periods of time where people are bearish. And so that's in within the uptrend. So what do we do here? Again, we're not going to get in perfectly with these trades. So we have this sell-off here, and let's say that, you know, we aren't just looking for the sell-off, because this sell-off was, you know, a 20% sell-off, let's say. So going back to bull market drawdowns, etc., 20% sell-offs are somewhere where we should be getting in, right? So in any case, if we are setting limit orders to get in at maybe -15 to -25%, and we've got like 3 or 4 orders at these levels that we want to get in, well then great, we've got some of our limit orders traded at these levels, so that's great. Let's say that maybe we're a bit more nervous and we're not really getting in at those levels, and we're not putting the limit orders in. What we're seeing is just the media and the news the wrong side of the trade. And let's say we wait, right? And we're up here, right? So we get a slightly worse entry, but you know, I want to be on the side of getting worse entries rather than, you know, saying, well, we're going to get him right at the bottom here. That's not going to happen. So let's go for a long position, because we're in some sort of drawdown and we've clearly bounced here. So let's say we're in a long position at around this price. Why? We are right at the mid trend line, which is Bitcoin's natural growth. So the downside here is essentially that Bitcoin is going to go back into this kind of bearish, you know, consolidation, right? So I'd say we're looking at this price level because we've got a lot of consolidation here. There's some resistance around here. So these are kind of price levels where the price may get to. So, you know, around this level, it could definitely get down there, but that would be a huge drawdown, right? It'd be about 30% drawdown. It could happen. So we need to make sure that if it's coming down here, what do we want to do? We probably want to be in the trade for that, and probably want to stop out around this level where that drawdown is probably way too much, right? Like if it's not getting some sort of support, then that is where we're saying, okay, look, we're actually going down back into a bear market. But the macro just wasn't there for that. You could feel that. The central bank had changed. Everything was a lot easier. Markets were starting to recover. So, you know, that sell the news is just a typical mainstream wrong headline that is totally the wrong side of the trade. The macro had changed. The central banks had changed. You can see that Bitcoin is in an uptrend, clearly from all of this price action. These lows are just higher each time, right? So we've just hit another higher low, which is an uptrend. So that's a great area to trade and go long, where others may be saying, oh, look, right now it's like sell the news, but it wasn't. So again, where do we take profits? Well, if you're getting in at 40, you're looking again at previous levels, right? So these resistance zones. So yeah, that is a resistance zone right here. This level right here is a resistance zone. And then, I mean, you're just looking at the all-time high. That was obviously a resistance zone. But if you're getting into a long trade at the mid line, I mean, you're looking in this trend for Bitcoin again to go up to the all-time high, no? Like to hit a new all-time high in a bull market. I mean, that's, again, that is the trade, right? Bitcoin, if you're in at this price level, you're looking for it to move up to the top end of its range at some point. So if you're in a spot, you can do that. If you need a shorter time horizon because you're in futures, then again, you're just looking at these resistance zones. So there's one here. That trade doesn't look very good, does it? You've got this kind of potential downside here. You want to be, you know, going higher, but the all-time high, take profits there. So risk reward is 1.6, which is okay. So again, it's us knowing that uptrend, macro is in an uptrend, macro is softer, Bitcoin's in an uptrend. People are saying some small event right now is like a big deal, and we take that trade. So that's the risk there. Either these profit targets because we had resistance here before, or you just stay in the trade until the top end of the bull market. Let's look at a third example, which is live right now as of making this video. We'll look at the macro trend, where we are on the Bitcoin trend, key price levels, market momentum. So for right now, as of making this video, Bitcoin is consolidating. It's fairly weak price action. It's definitely taking a breather, right? So it's not the most bullish price action. We're definitely not in a kind of short-term uptrend, right? We're in this kind of just sideways consolidation. In fact, it's kind of similar to this one maybe, and down here, fairly similar to this one. If you take a look back, right, you had these kind of periods, and you got 2 breakouts in these. Are we going to break out again and move to the upside, or actually going to break down? So, well, that's the trade, right? So, some thoughts here. Sometimes trades are very obvious. So, for example, the Silicon Valley, it seemed just like an obvious trade with the ETF announcement coming up. And we could actually see when the ETF was happening, like the issuers were getting ready to issue the ETF. We could see all of that coming out. But for some reason, the market wasn't positioned that way. So that was like a much easier trade. This one here, again, some uncertainty. We didn't know if the ETF flows were going to be good or not, but they were. Here we also have some uncertainty. So let's go through some things to think about. What's the macro trend? The macro trend is decent, not amazing. Central banks are getting softer around the world, and so that's fairly good for crypto prices. We could always look at like 10 different pieces of data that prove one thing or another, but in general, the macro trend is much better right now. Maybe not hugely euphoric, but it's a lot better. So decent macro trend, and obviously a decent Bitcoin trend as well. Now that we know that the ETFs were the most successful launch ever, there's obviously demand for BTC, so I think it puts us in a pretty positive position. We are after a halving, which is typically bullish for Bitcoin. So all of this is pretty positive for proving that we're in some sort of uptrend for BTC. So we probably want to be active buying pullbacks at this point. We also have right now, as of right now making this video, a lot of FUD around big sellers of BTC, right? So the US government is selling down some BTC. The German government is, Mt. Gox is distributing. So FUD, fear, uncertainty, doubt that there's a lot of sellers in the market. Price is going to be weak. So again, this is probably an opportunity to take advantage of short-term attention that is negative in a longer-term uptrend. So for right here, I don't think it's the best trade in the world because there are big sellers around, right? So just buying when there's big sellers around, again, probably doesn't make much sense. But the trade is there, right? The trade is there that if we look, what we've done is actually moved down from the basically all-time high into a support zone. So we've actually rejected to the upside. So we bounced from here, we bounced from here, we bounced here, and we've actually bounced here as well. So that's 4 bounces at this price level at 58 to 60. Seems like a decent support level, right? So again, with a drawdown, we're drawing down from the all-time high price of, it's a 22% drawdown. So we're in the range where you buy these pullbacks, right? Now, the downside of this trade is that these sellers in the market, they just could drive the price lower. So I think this trade is probably a 50-50 trade. But I think that maybe it doesn't even matter if we're looking at these price levels. So again, we have to look at support levels. This is a clear support level where we got some support and resistance before. So let's use that one. This is also coming off this as well. So let's just draw that on here. So we could easily come down to this price level, which is 52. I think if you have a lot of sellers in the market at once, people take some positioning that way, you could easily come down to that price level. So we have to have this price level as something that we need to make sure that if we're taking a position now, we can be comfortable with the price coming down to this level, right? Which is from here, if we enter a position at, let's say 60K, that's a, let's call it 15% drawdown, right? And I think we probably, if we're in an uptrend, we bounce from this orange line anyway. So that's somewhere where we have a fairly high probability that the price may come down to, but also if we're in an uptrend, a fairly high probability that it bounces from there. So what are we going to do? Well, considering we're not sure, we could just start to take positions. So we could take a position here with, let's say, half of our stack for trading, so whatever we have, knowing that we may come down to here, and I'd probably want to take another position if we got down to here, or somewhere around here. I may even put limit orders, 3 limit orders in, 1, 2, 3. Because to be honest, in a bull market, in an uptrend, I actually want to be buying these, you know, as we come into these support levels. So if we take a long position, let's say we get in here, yeah, we need our stop loss somewhere around this. We definitely don't want our stop loss here because that's where we actually want to be buying still. And our stop loss would be where the trade is invalidated. So, you know, give it some edge right here. If it start coming down here, that's like a big sell-off where, you know, I still wouldn't want to get out of the trade because I think we're in an uptrend, right? But you have to give yourself, when you're trading, especially with futures, when you're trading, you do have to make sure you use a stop loss and have a very specific amount where you're stopped out at. Otherwise, you know, you might actually just get liquidated. You don't want that to happen. So that's where I see it. And again, what's the take profit? Well, if you're trading short term, the take profit is the range high, which would be this. So that would be the level. Again, we're in a bull market, so really the take profit is somewhere towards the top of this range, in my opinion. It looks crazy, but that's what we're doing here, right? This is Bitcoin moving from the low end to the high end of its range. I suspect, let's say, you know, at some point here, right? Now, of course, if we're looking on the right-hand corner, we're looking at over 100K Bitcoin, which again is a big milestone. Are you going to hold it to there? Probably not, right? You're probably going to get out at under 100K because you know that 100K is going to get some rejections and you might have to hold on to the position for another 3-4 months, which brings in more uncertainty. So let's just bring it down here. So you're either, you know, looking for a bounce, trading out at the range high, or you're looking for that next break higher, right, up to that 100K level. Now, that assumes that Bitcoin continues to grow and appreciate in price over time, which that's just fundamentally what I think. That's why I, you know, buying or want to buy dips. Now, if you don't think that, then obviously none of this makes any sense whatsoever, and you just short it all. But I think we're, you know, realizing now Bitcoin is growing over time, and so we want to go long when the price is low and long dips. And if the price reverses on us for some reason, we got it wrong, we are going to lose. We're going to lose money. We just have to make sure that we're getting out and saying, okay, that's our trading stack, we get out. That's how I see things. This trade probably isn't the most obvious of trades. I think this price level is quite risky because there are sellers in the market and it's summertime, and so it's a risky trade. There's a fairly high probability we come down here, but maybe just take half the position here, save the other half for here, and then maybe down here is a get out. You know, if it moves lower, that really is a big drawdown where things have changed, right? So the macro is going to tell us that as well. So that's how I see it. With trading these levels, it worked before. Drawdowns are to be bought in bull markets, and macro may change and, you know, be a bad trade for us, but we are going to make bad trades. So that's the way it is. But if you're trading, they're the levels you have to go off, right? If you're investing and looking for areas to buy, again, we're just looking to be way more active when Bitcoin is towards the bottom end here, you know, or up here. We just don't want to be taking huge amounts of positions. Certainly not trading long here short term, because that's just going to wreck us if we ever get there, right? So it's up to the individual on the time frame that you're using. If you're trading spot or futures, and if you're, you know, looking to take short-term profits, or actually looking to take kind of larger positions and ride them out in larger uptrends. If you need more specific guides on how to actually enter a position on a trading system, so, you know, enter a limit order, enter the amount you want to trade, leverage if you want to use it. I don't recommend leverage. I think just if you're a beginner, just 1x leverage or no leverage at all is just, you know, the right thing to do. But we need to put in a stop loss if we're trading with leverage. The stop loss is important, otherwise the account's going to get wrecked if the trade moves against us. That's on Bybit. On Apex as well is actually the exact same thing. So you can use a limit order, multiple limit orders in. You can trade with take profit and stop losses, again, which we need. So we'll buy long with take profit or stop loss. You can put that in. If you want to know how to do that, specific guides down below. So it goes through getting set up on those platforms and putting those entries in and how to manage them and how to think about leverage and manage your risk if you are using it. Again, I don't recommend it. Just no leverage. It's a volatile enough asset class as it is. I'll leave all of those videos and links to all of the data that I use in this video down in the description below. Deposit bonuses to some centralized exchanges down there as well. I'm James, this is MoneyDG. Cheers for watching, and I'll see you in the next one.